The week ahead, probably going to be a pretty interesting week, particularly with the FOMC meeting in the middle of the week. As we start this, keep in mind that our emphasis is related to short-term trading. I see Goldman Sachs comes out over the weekend and talking about, raising their year estimate to 500. We are not focused on the long term, either long or short. We are focused on the short-term market, and that's where our audience is. The most relevant consideration for a shorter-term trader is the current market's trade location. If you look at the graphic in front of you, you will see that we are testing the August high, which you see it on the bar chart, sticks out, and the 4,300 level. We've been up to the 4,300 level several times. It went above it on Friday, but it failed to take out the August high. So this has been an area that the market has spent a considerable amount of time aiming for probably the last, several weeks. So I consider this August high 4,300 level a go, no-go level for short-term traders. The 5 main short-term issues that we are focused on for the week ahead are, first, Tuesday's CPI. Tuesday's CPI is the last meaningful economic release prior to the Fed's FOMC meeting. It starts on Tuesday. The announcement comes on Wednesday afternoon. And of course, the second area for short-term trading will be 2 stages on Wednesday afternoon. First, we get the release following the minutes of any action that the committee took. But what has been more important or relevant to short-term traders has been the press conference that the chairman has following the meeting. The next area I'm focused on, which we've talked about for a considerable period of time, is the pain trade. And just to redefine the pain trade is this standoff that we see has been going on between the long-term investment managers and the shorter-term traders. Our view is that the longer-term investment managers have been in a very conservative position. Some are probably slightly underinvested. Those that aren't underinvested probably have more conservative positions, whether they be conservative equity positions or maybe a little overloaded with bonds. This group would like to see the market go down. They would like to see the market not go any higher. If the market starts to go higher, they're in a difficult position because they'll be underrepresented, at least in our view, if the market goes higher, which could cause them to come off the sidelines and begin to purchase some more aggressive equities. So that's kind of a push and pull thing that I've been looking at for some time. Obviously, they would like to see the market back off. They would like to see the market go down maybe 15, 20%. And then from the things that we've been told and read, then they would like to come in and accumulate more equities. I doubt if it's always going to be that simple for them. But I think the most important focus that I have is short-term inventory. The short-term traders have been pushing this market higher for some period of time with only limited results. Yes, we talked early on, they're focused on the August high / 4,300 level. But in that process, it appears to us that short-term inventory is very long. One of the things that we focus on in short-term inventory or short-term trading is sometimes markets are too long in the short term to go any higher, and they have to break before they can rally. So I think that if the short-term market rallies from here, it extends that risk. the most positive thing for the market, at least probably on a short term and intermediate and longer term, would be for the market to break, let the inventory get rebalanced, let the buyers be replaced with stronger buyers, and then come back up and retest the 4,300 / August high. But right now, if I had to leave with one message, I believe the odds are very high that the market is too long in the short term. Remember, that is not a comment on the longer term. It's simply a view that the short-term inventory is dangerously long and probably needs to correct somewhat before the market can make any more forward advancements. Thank you very much. Have a great week.